Hello, friends. My name is Ed Niedermeyer. I want to talk to you a little today about Tesla takedown. You may have heard of Tesla takedown. You may have heard news stories about the protests. You may be seeing this video because of the Tesla takedown hashtag. Tesla takedown is a protest movement that started spontaneously. It doesn't have any leaders. It's an autonomous movement at this point. And it's a protest movement. And protesting is a tactic. And what I want to talk to you about today is not tactics. It's not protesting as a tactic. I want to talk about a broader strategy. And it's a strategy that can certainly encompass protest as one of the tactics for implementation, but I think it's a strategy that provides a lot of different opportunities to affect some kind of change in the situation that we're seeing today. So I'm using the term Tesla takedown because it's the best way to describe the strategy, but I want to make sure that people understand that it is distinct from the spontaneous protest movement that's happening. I don't speak for anybody else but myself. This is just my proposal for a strategy for how to think about using Tesla to affect change on the broader political situation. I've been following and reporting and commenting on Tesla for basically about 10 years now. You can see I wrote a book called Ludicrous, the Unvarnished Story of Tesla Motors in 2019 that came out that covers sort of some of the things that I'm talking about today. Having paid a lot of attention to Elon Musk and Tesla for a long time, I think there are a couple of different things that we need to understand if we're going to use Tesla as a lever to, again, affect some kind of change on the political situation with Elon Musk, currently in a position of massive unelected power. Sort of the foundation of the idea of the strategy comes from sort of the reality versus the perception of Elon Musk personally, and Tesla's as well, and all of his companies. The perception is that, he's this, right? I mean, think of everything you know about Elon Musk, right? He's wealthy, he's powerful, he has all these companies, he's incredibly successful, he's a genius, he's an engineer. 10 years ago, I got sucked into this story because I decided not to take all of that at face value, but to actually look into it myself. And in one example after another, I found that basically almost none of that was really actually true. The reality is vastly different. I could talk about that endlessly. I want to try and stay focused to keep this video as tight as possible. The reality is, where the rubber hits the road on this, is that Elon Musk is not very good at building actual businesses. And I think that's something that you really have to understand the strategy that I want to lay out here. He follows a path that has become very popular in Silicon Valley for startups. And he and his companies are distinguished by being more than just startups. They're these big companies, but they still follow the same basic rules. And essentially what happens is that in the Silicon Valley venture capital ecosystem, it is possible, if you're a certain kind of person with a certain kinds of connections and a certain kind of reputation, to manage your companies around sort of constantly raising the valuation of your company versus improving them as a business. And that's sort of the heart of what Elon Musk does. This comes out of fundraising, right? When you start up a company, you raise some money to kind of get started. You start to prototype a product and you raise more money to bring it into production. And what happens a lot of times, and what happens certainly with Tesla, is that, that fundraising, which involves sort of coming up with plans that get investors excited, and then they give you money to go pursue them, that has become what Elon Musk does and what his companies do more than anything else. And yes, Tesla makes cars, and we'll get into that, but and Tesla is the closest thing to an actual business. But fundamentally what Elon Musk does is he raises money, right? He hypes ideas, he raises money that increases the valuation of the company. And so his share of that company, the stock that he owns in that company, goes up. And this is the source of his wealth, right? It's not building companies that make something for one price and sell it for a higher price and make profit and generates cash flow that then goes into his pocket. This is what happens if you think of Amazon or Facebook or a lot of the other sort of big oligarch companies. These are cash printing businesses in a lot of cases, very profitable. None of Elon Musk's companies are like that. And I want to just take a moment to kind of go through some of them really quickly. So, let's start with the small ones because we can kind of knock them out. Neuralink and The Boring Company. I I mean, these companies are not companies. They don't make or sell anything. They are ideas that Elon Musk has used to raise money. And so he can raise money. They have a notional paper value that represents what investors have bought into the possible sort of business potential for these ideas might be. But they're giving him money in hopes to get there. These companies have not gotten anywhere close to a business. We can basically forget about them in terms of Elon Musk's sort of financial empire. X is an interesting one, formerly Twitter. This is the first company that Elon Musk really bought. And I think it's important here because, he wildly overpaid for it. He paid $44 billion for it. That valuation has crashed. Advertising has crashed. The fundamentals of that business are not sound. It's a privately held business, and this is an important piece of understanding all this, though. So we don't have a ton of detail about how the business is operating. But all of the clues that we have about how X, formerly Twitter, is operating, it's not profitable. It's losing money. And it's losing users, right? It's all the metrics are kind of in trouble. And so, that's important too, because this represents, a business that Elon Musk has come to more recently, and that'll be important for reasons that I'll get to later on. And I apologize, I do have a little construction in my house. Hopefully it's not making this too much of a problem. So Tesla and SpaceX are the foundations of Elon Musk's empire. Tesla's worth about $1 trillion. SpaceX is currently valued at something like $350 billion. So SpaceX is worth less than Tesla is, but Elon Musk owns more of it. And so both of those, Elon Musk's share of those two companies sort of is the vast majority of his paper wealth. And again, it's really important to emphasize here, he owns stock in these companies, right? He can pump the value of that stock in these companies by promising things in the future. And that raises the valuation, that raises his notional wealth on paper. But until those companies actually deliver businesses that actually produce profits and cash flow, those valuations are speculative, and they can come down at any time. And I think that's a really important piece to understand here. Now, SpaceX, we're working our way to Tesla because that's the main focus here. But SpaceX, let's talk about briefly. Again, it's a privately held company. We don't have a lot of details about its financials. What we do know is that they're continuing to have to raise money on. So they continue to go out, sell stock. Again, this pumps the valuation higher because Elon Musk is good at that. He's good at raising the expectations, right, and selling the stocks. That brings some cash into the company. But if they're doing that, it's because the business is not generating enough cash to fund its own operations and investments. And so, I'm not an expert on SpaceX. I'm not going to pretend to understand. My basic understanding of why the economics are not sound there is that, the basic idea was you lower the cost, right, of launching things into space. And that means there's more people who can afford to launch things into space. And so that grows your market. And that's the basic thesis of SpaceX. Well, they've done that. They created the Falcon 9, and again, that part of that company, like parts of Tesla, their early cars, is a lot of things to like there. But the reality is that they expanded that market by lowering the cost. and they have, I don't know, depending on how you look at it, something like 85% of the private launch market. And yet half of those launches, they have to launch up their own Starlink satellites. And Starlink doesn't make money. So in my world, I cover the car business. This is like saying, we're going to build a car factory that instead of making 500,000 units, we're going to make 1 million units, and that brings our costs down, so the cars will be cheaper, and so more people will buy them, but people aren't buying them, and so the company has to buy half of those cars themselves and put them into a rental fleet that doesn't earn money. This is an example of something that has actually happened in less exaggerated terms in the car business before. It doesn't work. This is when companies have to buy their own product to prop up their scale, that is supposed to be the way that they build a market, it's not working. And the reality is it's very hard to make money in space. And that's the problem, right? There's not enough people who think they can make money in space to pay for these launches, even at the lower cost. Now, again, maybe this big metal starship will save this. Supposedly, that's how they're going to save Starlink too, because it'll launch bigger satellites that allow them to scale that in a way where Starlink will make money. Maybe it is, maybe it isn't. The point is that SpaceX has been around for many years now, and it's all come down to a binary bet on maybe Starship saves the company and maybe it doesn't. So it's not, the fundamentals of the business itself right now are not strong and growing and something that they can build on into the future. They're betting the whole company on this big metal metal rocket that keeps blowing up. So, you know, that deals with SpaceX. Okay, and the other thing about SpaceX, right? So SpaceX is worth $350 billion. Elon Musk's chunk of that is significant, right? Notionally in the tens of billions of dollars. The problem is because it's privately traded, it's very difficult for him to turn that paper value into cash in his pocket. And that's true for two reasons. One is that, and this is true of all of his companies, if Elon Musk sells his position in his companies, it breaks the spell, right? He brings in investors to bring in cash to these companies because they believe in him. It's not because the businesses are so good, right? It's because they believe in him and that he'll get those businesses to be so good. If he sells, that signals to everyone else that he doesn't think there's upside to profit from in the future. They're going to notice that signal and they're going to sell too. And so he kind of can't sell any of his companies in too much, because of this psychological aspect of they're all overvalued relative to what their actual business model produces. And so the other issue with SpaceX that's really important to understand is that it's privately held. Now, this allows Elon to keep the financials secret, which is why everyone just assumes, oh, well, they have all these government contracts, they must be making tons of money. All the clues that we have suggest that SpaceX isn't making money. But, the important part is that because it's private, it's not a publicly traded stock. You can't just go out and buy and sell SpaceX shares. It is possible to do it, but the only people who can buy are what are called accredited investors. And that means you have to have at least $250,000, which means, by implication, you understand that these are riskier investments. There just aren't that many of those people. I mean, there are, but it's harder than, Tesla, for example, which anyone can go out and buy and sell and trade. And so, the public markets allow what's called liquidity. And liquidity just means how quickly can you turn around and sell your shares in this company at the current valuation. So again, if Elon Musk could sell it, but he'd have to go out and broker a deal to sell SpaceX shares, that would probably hurt the value of his company, not just because of the psychological effect I mentioned, but because it's not liquid, and because of it, if someone's going to come in and buy, they're probably going to want to do so more at a discount. If it's something that is sort of a rush sale, right? This is something just to put cash in his pocket and not a funding round to sort of, with all the prepared materials explaining what the big new hypey thing is that makes you want to invest in this company. So SpaceX, big chunk of Elon Musk's paper worth, but not liquid. He can't really turn that into cash very readily. So that brings us to Tesla. Now, Tesla is Elon Musk's most real business. Out of all the businesses he's created, it's the only one that has actually produced some profit that we know of for sure. SpaceX may have been briefly profitable here or there, in the way that Tesla for a long time. Every once in a while when things would get hard, they would sort of engineer a profit, and they would do it, selling ZEV, vehicle credits that they were earning through these government programs, and they would do it a bunch of manipulating their accounts payable, not paying their suppliers for a month or two, so that it, the finances look better than they do. They have these different ways of engineering a quarterly profit when they need to, but Tesla's been sort of somewhat sustainably profitable for a while. Certainly during COVID, the core business of making and selling cars, which is 90% of Tesla's revenue, money coming into the company, that was doing really well during COVID because, the Model Y came out, EV hype was booming, and the car business was undersupplied. You couldn't get cars, and so car makers could charge what they wanted. And so Tesla was growing its sales and making profit, sort of 2020, 21, 22, 23, 24, this is started to fall off because these sort of external factors have worn off. Tesla also hasn't invested in their lineup, right? And so their cars are getting old. Their first new vehicle in years, right? So their first all new vehicle since 2017, and their first sort of new nameplate since 2020 is the Cybertruck. Last year was its full year of sales, and it was a flop. Tesla's sales and their profit margins have gone down in 2024. And that's really significant. For Tesla's entire history, even when it wasn't making money, it had things that investors could look forward to, right? Growth seemed like a plausible option. They had new models coming, they had affordable models coming, and so people hung with them even through the hard times. What's happened now that's unique at Tesla is that it's peaked, right? So they sold almost 2 million vehicles, and now they've started to come down. There are no new products on the horizon that make it seem likely that they are going to be able to turn that around anytime soon. There's talk of new products coming out, but when they show those, there's going to be, some time before those come into market. So we have a couple years where we can expect Tesla sales to stagnate and come down. And I think what's really important to understand here is that hasn't happened before. Tesla has sort of always sort of grown, and that this stagnation and sort of beginning of decline is new, that it takes time to turn that around. It takes investment to turn around. Tesla isn't, that we know of, making those investments. And so the stock is still really, really high, though. So the core business has peaked and is in decline. And yet the valuation remains really high. And so what's keeping that up is sort of two things. One is sort of just generic, Tesla stock is sort of almost like a meme coin where people will buy it just because they feel a certain way about Elon. I think the most recent rally in the stock we've seen is sort of due to that because of his association with President Trump and the administration. And I think, that's just a speculative thing. Maybe this is something this relationship will help Elon, will help Tesla. So far, it hasn't really. Certainly, we don't see anything coming from the administration that will fundamentally change Tesla's problems with its core business. And also, there's nothing that really fundamentally changes, the other thing that's keeping the stock up, which is full self-driving and AI and humanoid robots. And, this is a big, complex topic. I'm currently working on a book about the self-driving piece of this. It's really important that people understand that, he can't deliver. He's been promising for 8 years that it'll be done by the end of the year. It's never happened. A thing becomes self-driving when Tesla says, we take legal responsibility for the system when it's active. Elon Musk isn't even talking about that, right? So people can say, oh, look, my car drives itself. It doesn't drive itself until Tesla takes that legal responsibility. And again, they're not even talking about doing it. So there's no reason to expect that that's coming soon. And again, when someone promises something 8 years in a row and never tells you why they haven't delivered on it, it's because they're lying to you, right? They're a scammer. And yet somehow this is sort of keeping Tesla stock up, even as its core business flattens out and now over the last year has really nosed into decline. That's sort of an overview of Elon Musk's sort of business empire. And as you can tell, none of these businesses really generate money. If we were talking about trying to take down, Jeff Bezos or Mark Zuckerberg, by taking down Amazon and Facebook, that would be really hard because those businesses generate a lot of cash. Now, Zuckerberg is blowing a lot of that cash on the metaverse and other things that are losing money, but fundamentally the core of those businesses is really strong. Making and selling cars is not like that. It's very difficult. It requires constant investment. Tesla isn't making that. The competition has been keeping up. Tesla also designs their cars in a certain way that is exciting when they're cool, but they really lack some practical things in terms of the quality, in terms of service and reliability and things like that. So as time goes on, people are realizing, okay, maybe, cars from other car makers aren't as much like a smartphone as a Tesla is, but, they're more like what a car used to be in that they're reliable, they're durable, you can service them anywhere. They're not thousands of dollars to replace door handles and things like that. And I think that's one of the factors that's really contributing to Tesla's sales slowing off, in addition to the fact that they're just not continuing to invest in those products and keep up with the competition. This is all really important to understand because this is Elon Musk's vulnerability. He has this huge wealth on paper. You look at his paper wealth, and it seems like there's no way we'll ever be able to take this guy down. You look at the number of companies, and I understand why people think we have no shot at taking him down. When you understand that none of those companies really reliably make money, and the only one that does, Tesla, it's done so because of government subsidies, which are mostly going away, right? It's done so because it hasn't really had competition, which has completely changed. It does have competition. And the mythology of Elon Musk's business acumen is going away too with X, with the Twitter deal. He overpaid for, and he's destroyed the fundamentals of that business as well. So, we have a guy here who has all of these promises that have inflated the paper value of his companies and of his personal wealth that he's not delivering on in any way. And the core business is failing, and he's not going to be able to deliver the miraculous full self-driving that he's promised anytime soon. So this creates an opportunity to attack Tesla specifically, right? And the reason for this is because this is how Elon gets his cash. So you can have all the paper wealth in the world, but if you can't sell that stock for A, the psychological reason that I mentioned, or B, because of liquidity reasons, it's not real. It's just a paper number. And so what we're attacking is not necessarily, well, we're attacking Elon Musk's wealth, but the lever for attacking his wealth is attacking his cash position. And that's really important to understand. He needs cash to fund his lifestyle, right? To pay, I don't know, Doge people, who knows what he's doing with all his money. Certainly private jets and homes in Austin and all kinds of other things. But his source of cash is Tesla. None of his other companies produce cash. He can't sell or really even borrow against their stock because they're private companies, and it's much harder to borrow against those stock. So what he does is he takes his big chunks of Tesla stock, which are worth a lot of money on paper, and he pledges them to a bank as collateral, like a mortgage on a house or on a car loan, right? Where they get the title to your car or your house until you pay off that loan. And it's backed by this amount of dollars worth of Tesla stock. And then he gets a loan. And so he does this, in part to avoid taxes, but in part to protect his ownership position in these companies, because it's very important to him that he controls them. So he can't really sell for that reason either. So this creates a really interesting situation, because now not only is the stock overvalued, right? And just pure logic should bring it way down to a tiny fraction of where it is based on where the actual business is. But also he has these loans which create these other triggers that make it much easier to bring down the value of that stock. And that's because when you pledge, I don't know, just for a hypothetical, call it $1 billion worth of Tesla stock, right? That's, a certain number of shares that you put into escrow or whatever. And, the notional value of that is based on the price of the stock at that time. Well, if this price of the stock comes down to a certain level, then all of a sudden the collateral that he's pledged to back those loans is not enough anymore. And he gets a call from his bank. And this is called a margin call. And if you are in trading or finance, you know what I'm talking about. If you're not, that just means the bank says, hey, you borrowed money from us, but the collateral that you used to secure that loan is not worth what it was when we did the deal. You got to put more collateral up. Well, where does Elon get collateral in that position? I mean, he has limits on how much Tesla stock he can put up. And so what he basically has to do then is he's forced to sell his stock. And that is the magic moment, because then you get a whole host of effects, right? Just by selling the stock in a big chunk in an uncontrolled way in order to meet that margin call, that creates a big drop in the stock, or at least a noticeable drop in the stock, which will then trigger algorithms and momentum traders to pile on and to exit, start to sell themselves because they see that trend developing and they want to get out while they can. It also triggers the psychological factor I mentioned before, which is Elon selling his stock. Whether he wants to or not, he's selling, he's getting out. That's going to signal to people that they need to get out as well. And what I want people to really take away from this is that Wall Street runs on a very simple set of principles. It's either fear or greed, right? And for over a decade now, 15 years now, basically, Tesla's stock and Elon Musk has been able to tap into greed, right? Whether or not the business is doing well, there's this belief that people are going to buy the stock at higher price, that the valuation will keep going up. No one wants to bet against Elon Musk. All he does is succeed, is the perception. And even if you don't believe that yourself, you think other people are going to believe it. And so you buy the stock because you think you can sell it to someone else at a higher price later. If we can bring down the price of Tesla stock, especially to a point where it triggers these margin calls, but even not, right? We can start to turn that fear into greed. And, so that's the fundamental strategy is we have to turn the psychology on Wall Street around Tesla from greed to fear, right? Instead of people thinking, oh my gosh, Elon Musk is this genius, his businesses are so successful, I have to get into that stock because it's going to be worth so much more later. We have to get people to understand that he's not a good businessman, right? The Twitter deal proves it. Honestly, a lot of the stuff he's doing at Doge proves it. The fact that none of his businesses make money proves it. We have to start with that message, right? And then if we can attack the sales, that's the other piece, right? So going out to dealerships and protesting is a really important tactic to implement this strategy, because it stigmatizes the Tesla brand. It encourages people who are coming there to test drive to think about maybe buying, to think, oh, wow, this is a toxic brand. My neighbors aren't going to like me. They aren't going to think I'm cool if I show up in a brand new Tesla. If people bring in their Tesla for service, they'll think, well, they may be thinking, oh, well, I bought my Tesla before I knew Elon was crazy. They're not thinking about the fact that every time they bring it in there, right, for service, that they're putting money into Elon Musk's pocket. And they're not just putting it into his pocket, they are propping up the one company that is sort of holding up his whole position. Again, it's because of his ability to turn the paper wealth into cash. That's so important here. Tesla is his only opportunity to do that. And so every dollar, whether it's buying a new Tesla, whether it's buying a used Tesla from Tesla, whether it's servicing a Tesla, or whether it's charging a Tesla at a supercharger, all of those things put money into Tesla, which prop up his only way of getting cash. If our strategy is to create a cash crunch, we got to starve Tesla of its revenue. And again, because right, sales in China are down about 11% right now. China is a whole crazy competition. Tesla's not keeping up with the competition in China. They're getting creamed, and it's only just beginning. In Europe, it's even worse. In a lot of European companies, Tesla sales are down 40, 50%, like half. And in the last month or two, and that's partly because of the EV market there and things that are happening that are unique. Part of it is political. It's people doing what we need to do here if we want to change the situation, which is not buying Tesla cars and telling people not to buy Tesla cars, boycotting those cars because of who he is and because those cars support what he is doing right now. This puts Americans in a unique position, right? The rest of the world, Tesla is flat to down. This is the only place that Tesla can now maybe make money is in the United States. It's also the only place where they can really sell the Cybertruck in any numbers, which is a big factor in this. Because again, it's their only new product. If Tesla's new products can't make money, investors are going to notice that, and they're not going to put more money into the company because it's clear they've lost their touch, right? So we have to boycott Tesla. We have to make the brand toxic. We have to stop sales. We have to stop people spending money on charging, stop money on servicing. And simultaneously, we have to work the stock side of this as well. We have to give people ways to invest in technology and in the broader market through things like S&P 500 that don't put money into Tesla stock, because a lot of those ETFs, exchange traded funds, mutual funds, that kind of thing, those do include Tesla. And so, we need to get financial advisors to tap into this market that's developing of people who want to be invested in technology, but don't want to give Elon Musk their money. We need to attack their sales as well. And again, all of these things, the failure of Tesla's business, the lack of profitability, all the other businesses, the overvalued stock, the loans pledged against Tesla stock, these are all pieces of this puzzle that create a unique opportunity to crash Elon Musk's wealth in a really fundamental way and potentially take him off the scene, maybe even permanently. Like, the sky is the limit to this opportunity. Now, I'm out of time. I want to keep this video shorter than this anyway. I'm going to stop now. I have more to say about this. There's certainly a lot to say about how we turn this strategy into tactics and all the various different ways that we implement this strategy. But hopefully this video gave you a brief, sort of overview, understanding of why going after Tesla actually can have an opportunity to bring down Elon Musk. If we turn their profit margins and sales volume negative, the core business that makes 90% of Tesla's profit becomes unprofitable structurally, where the more cars they sell, the more money they lose. We're not far away from that. And if we can tip it over into that, then investors can't wait forever for the magic self-driving beans to sprout. And they've already been waiting 8 years with no reason to believe that they will. So we have to be confident. We have to convince Wall Street that we will do whatever it takes to cut this business off from its revenue and to bring down the stock. And we need Wall Street to fear us. We need them to be afraid. We need them to wonder what happens if people keep protesting. What happens if sales keep going down? What happens if Tesla's profit margin goes negative? The more they think about that, the more likely they're going to be to sell the stock. And when they start to sell the stock, this thing will accelerate fast, and it will be so exciting to watch. So I look forward to watching that with you. I look forward to hopefully trying to explain more of this strategy and the tactics to implement it going forward. And certainly if you're in Portland, Oregon, I hope to see you every Saturday at 11 a.m. at the local Portland store, 4330 South Macadam Avenue. Let's stay out there and let's get after this.